Good morning, good afternoon, good night. Welcome back. Welcome to. My name is Joe Josh. I go by iChart Daily. Today is August 26th, 2025. In today's video, I'm going to be giving you a window to my thought process on what I think potentially is playing out on Bitcoin. And then I will end the video with SEI. Shout out to you guys for supporting the dream. I'm giving everyone the opportunity to get a technical analysis done. So in the description, there will be a gig to request a ticker for me to do a technical analysis on. And I'll do a long, mid, and short term, where's support, where's resistance, where we should set alerts, where I'd like to take profit, where I'd like to buy more, the overall sentiment, the whole nine, cuzzies. So, first things first, though, you got to check to see what Bitcoin's doing. Why? Because Bitcoin has almost 60% of the market cap, market share just in itself. Now, one thing that we are noticing is a collapse of Bitcoin's dominance, a nice consolidation, right? We went from 65% down to 58%. If you remember me saying I'd like to see a consolidation in Bitcoin as well as Bitcoin's dominance, but the second pump that comes from Bitcoin, right, if we consolidate back to 90 to 85,000, but the next pump that brings us back to the 120 and potentially even higher. When Bitcoin goes up, Bitcoin's dominance continues to go down, right? The same way it did here, allowing, well, actually, I would say here, right? Like more in this range, but that allows the alts to do what they need to do, and it's considered alt season. So, first things first, this is for educational purposes only. This is not financial advice. This is a window to my thought process. I'm trying to once again regurgitate all of this information into about a 10-20 minute video. Repeat the process over and over and over for hundreds of videos so that eventually this lingo, this process starts to stick in your mental process, in your thinking. So I always start long, monthly, then I go down to the 3-week, 2-week, weekly, and then I go to the 5, 4, 3, 2, 1. And then eventually sometimes I do the 12-hour, maybe the 6-hour as like shorter term time frames. I use the monthly to understand clarity, right? If we are in section B, meaning we're below the histograms, in section B, which is below the 50 on the RSI, in section B, which is below the 50 on the stochastic RSI, below the moving averages. I don't care what anyone says. We're in officially a bear market, and for Bitcoin's dominance, right? Bitcoin's dominance will plummet. And where should we plummet to? So what I do is I look for major liquidity zones where we have seen either support and resistance in the past. And you could clearly see we have seen support in this range, right? 39 to 42. Are we making a higher low? Of course. We're doing something like this. This looks like it's doing something like this. And we have potential to come back to, I would say, here is your first level, right? I would say here. Just visually speaking, you could see there was support, resistance, resistance, support. It's a key level, right? So I'm going to choose like 2, 3 levels that stick out like sore thumbs, right? So this is the first one. You could see this is 57%, which was major support in the past. We need to see if we stop there. You could set an alert there if you'd like. Next major support is 52, 53, and then I'm looking for 49 to potentially 46%. If I had to place bets, I'm going to say from there to about there. Because of that, down to that. So I'd say from 52 to 46% is where I'd like to see Bitcoin's dominance fall to. Now we say Bitcoin, right? Bitcoin. First thing I'm looking for in Bitcoin on the monthly is what's happening with the RSI, what's happening with the stochastic RSI. Stochastic RSI is at the 64 and the 60, but it looks like there's a death cross on the horizon. That is never a good thing. Bitcoin is making its lower high, lower low. If you remember this in the symmetrical triangle, and we're curious to see if we do come down, right? This has the very high probability of happening. We just need to see does this happen or does this happen closer to December into, what is that? Yeah, into like November, December, stuff like that. Right, because here's October, November, January, right? You want to see if starting of the new year, Fed's lower rates, this symmetrical triangle could break to the upside. Bitcoin could go back to, 130, 140,000, but once again, during that time, Bitcoin's dominance is falling, and we hit that major resistance level, right? 96, 95, 91. I keep saying this one could be here at like 85, which would be the bottom right there. I mean, I've said this for months, bro. Months. There's videos, Discord links. I mean, months of me saying this. Do me a favor, if you remember me saying that, like, comment, share, show someone who needs advice. So that's that. Monthly doesn't look great. So what you could do, set an alert at the RSI breaking the 67.88 that notifies you that the confirmation pattern is happening. We're no longer using the moving average as support, and we're coming back down to, like I said, that support line of the first one. I say we come back down to like here, right? 64 to 63, because there's nothing here, but if I look left, you could see support, you could see support, you could see support, you could see resistance. So I could see that playing out. If that plays out over the next month or two, it could be bloody. Stochastic RSI, I would probably right click on the stochastic RSI. You want to make sure the K crosses the stochastic D line, create, and that'll notify you if the blue line crosses the yellow or whatever colors you're choosing. It's the shorter time frame crosses the longer time frame. Also, someone said in an email the other day that my indicators, even though they're a MACD RSI and standard stochastic RSI, the inputs might be different. I've changed it so many times. So I use a 12, 26, 7. I use a 14 length with a 14 and 2. And then my stochastic is 3, 3, 14, 14. Excuse me. 3 week, you can see the death cross already happen. Right? The curvature coming down. Death cross happening. That's why I was saying the weekly doesn't look great. We broke the moving average. We broke the 70, 80 line. We had room to bleed, and we went back to, this is the importance of the 11 and 21. We went from 123,000 down to the moving average of 113, which was lining up with previous resistance. And I said if we break the first moving average, we're going to go to the second. And I lined that up with this section here, right? So I'm like, all right, if we come down eventually over here, this is the moving average. Is there any liquidation there? And yes. And if we break that and we come to here, is there any resistance? And it's yes, right? So now we need to see if a dead cat bounce happens, right? Because we're so oversold, but is the dead cat bounce going to form a lower high? And is that lower high going to fuel more hidden bearish divergence? So what am I talking about? So each wave that you've been seeing since 15,000 has been going higher and higher and higher, okay? So we had wave 1, wave 2, wave 3, wave 4, wave 5, and we hear the problem is this past 2 waves. I keep saying the same thing over and over because it's still playing out. These are weekly and monthly time frames, and if you remember me calling the November to the March, I mean, I was saying this was playing out from Thanksgiving, bro. And it took 2-3 months for the top to play out to eventually break the support at 92,000 full. Right now, support is 100,000. We need to see if we're going to come back down to that, fall through that, and eventually even make an even lower low. As of right now, I feel like this is playing out. Like this is playing out where you could have these dead cat bounces, but as long as the next swing high doesn't make a higher high, and then you have a dead cat bounce, and as long as these highs don't make a higher high to these highs, and then you could have a dead cat bounce, and then these highs could make lower highs to these highs. It's the same thing, right? Same thing. We just need to see if the overall trend stays intact, meaning the monthly, and then we could come back down to 96 to potentially 95,000 and form the same lows here, or are we forming like a macro top where something like this is playing out? Not something like this. This is the descending triangle, but my point is the length, right? How long did this play out? It was 315 days. How long did this play out? It was like 400 days. How long did this play out? This one was about 300 days. We had to break the support of 400. So we're here, right? We are in the baby forms of it, all right? Just in the baby forms of it. This right here. We're only 40, 50 days in. So we could come down, come back up, this and that, play this all out till here, and then see what happens. It hasn't happened yet. This is straight speculation. My point is the hidden bearish, right? So the waves have been making higher highs, but this is the first time that your MACD swing made a lower high. This is the third time that the RSI has made a lower high. So I'm curious to see what plays out here. Now, support levels on the way down. Once 1, 11, and 21-day moving average has been touched, I go one step out. So now you can see the 2-week 11 lines up with the same support system of these wicks here of 107 to about 110,000. It's a range. If you remember me saying in the Discord that those were the ranges, do me a favor, like, comment, subscribe, share. The next support system, if this level were to break, this is why I have an alert here at the 105. I'll probably lower that below. I don't know why there's 2 here, excuse me. Put it right below this wick here, because that's your most recent low, right? So I'm curious to see if the trend stays intact and we're creating a higher low, or if we're going to break this low. If we break this low, you're most likely going to retest your next lows, which is this level here, right? And now, can you confluence this level here that I'm talking about with a moving average? And it's yes, right? The moving average should come up and it should line up with, let's just say, 99 to 100,000. So now we need to figure out if we're going to have this dead cat bounce come back up and then eventually break down, or if the next candle that prints in the 5 days, 9 hours is just going to print and then fall right back down to these levels here. So another indicator that I use is the market bottom indicator. On my screen, I created the pine script so that it turns the candles hollow when more than usual volume is coming in, and it's used for me as almost a market bottom indicator, but also a VPVR. I also have a market top indicator which turns the candles hollow, and also I use it as a VPVR. And if you're breaking past these white candles, you're going to have major moves to the upside because you're going past all that selling liquidity, all that selling pressure. I use these on longer time frames. They hold more value. What I mean by that is if you're seeing hollow candles on a weekly time frame, it is nothing to mess around with. If you're seeing hollow candles on a 5-minute, it's called the market bottom indicator, but it's not calling the market bottom. It will call the market bottom and give you a great visual on weeklies and longer. As you could see here, when it went off and you started seeing wicks, this was the market bottom, at least for the swing. When you see wicks coming down in hollow candles, well, guess what? We didn't break 55 and we started this bottom here. So we're not seeing a hollow candle yet. That would be a nice indicator that we are forming that bottom. Next, right, trend lines go with trend indicator being the weekly, the monthly MACD. It's still pointing up. We need to see something like this in order for me to say we're going flat. So as of right now, the trend is still in an uptrend, right? We're still doing something like, well, it's not necessarily that, but it's more like that. But this is changing because of the hidden bearish, so it looks more something like that. So once again, we need to see if we come back down to the yellow support line, lining up with the yellow line, lining up with the 11 and 21 day moving average of, let's just say, once again, 100 to potentially 93,000. And that would form another higher low to this macro swing low here, which would then cause another macro higher low to this swing here. The only thing I wouldn't like about that happening, right? You got to play chess, not checkers, and understand not the move that you're doing now, but the implications and the ripple effect of your move now and what could happen 2, 3, 4, 5, 6 moves thereafter, right? So this is playing out, and if we do come back down to the 99 to potentially the 90-something thousand, that shows me that if we come up and we're still getting hidden bearish, right? You always have to factor in, is there hidden bearish? Is there regular bearish? Is there hidden bullish? Is there regular bullish? To help you understand the chart market structure, right? If we continue with the hidden bearish, it's like walking, I keep saying the same analogies, it's like walking on a lake and the weather's getting nice, and it's like, is the ice going to crack? Is the ice not going to crack? The point I'm trying to get to with that analogy is like, this will not continue up forever, the same way that this looked like this one day, and eventually we formed the top and then we came down. So this rising wedge that was a rising channel will eventually come down. As we form more hidden bearish divergence, the ice is getting thinner, the weather is getting warmer, and eventually you're going to step on the lake and fall into the water. That is when we break this yellow line. That is when the MACD officially death crosses. We break down, stochastic breaks below the 50, and all of the stars align for me to officially say we are breaking market structure and there's a huge room to bleed. As of right now, it's just a consolidation, but my point I was trying to get to was, if we do come down and we form the same low here at the 98 to 100,000, with the hidden bearish divergence forming, there's a probability and a high probability of us coming back up and forming either the same high or a lower high. Now, there's two scenarios that could play out. If we come back up and form a lower high to 124,000, that is a head and shoulders, right? So this would be the base. You come up your one shoulder, you come up your head. This is your neckline of 100,000, right? Your other shoulder would complete here. And then we need to see if the hidden bearish continuously plays out. If this pattern plays out, the neckline could potentially be broken and we could potentially fall back down to 80,000. Just throwing it out there. Levels, obviously, first one would be the 90,000, second and third one would be the 70, 80,000. That would be amazing for people who have cash and have been taking profit. Horrible for people who are looking to put cash in right now, thinking that Bitcoin has a potential of even just a 2x. I saw a lot of people over the weekend. Everyone keeps asking me the same thing. I got money. What should I do? And they don't like the answer that I've been saying. I've been very transparent. I personally, who have been accumulating Bitcoin not only since this level, but these levels and these levels as well, I like to buy on the dips or open longs at the dips, meaning on longer time frames, do as minimal trading as possible, and use a decent amount of leverage to run that baby up. So I have been taking profit, right? Not here, not here, not here. If you remember me saying around 100, right? So 100, right here, here. XRP, I mean, we've been telling everyone, I've been telling everyone since 25, 35 cents. The thing's around $2, $3. You'd be foolish not to take, once again, not financial advice, but there's levels, right? You have to sit down, look yourself in the mirror and say, there will be a bear market. Say it right now. There will be a bear market. My portfolio can go down minimum, and I'm being conservative here, 50%. Do I need the money? If you don't need the money and you're okay with it, knock on wood, you don't die. You just let the bear market play out. Bitcoin has and proven itself that it's just making higher lows and higher highs. So if you just wait until the next halving, which is around May 2028, yeah, Bitcoin could come back down to, 50,000, 40,000. But as long as it makes a higher low to the 15,000, then the most recent high of 115 to 120 will probably be broken by 2029. That's just the way it is. Personally, me with my skills and my assets, I look to take profit. And my point I was trying to get to was people don't want to hear that I'm telling them to stack cash. Stack cash. Wait for a huge correction. I don't care if Bitcoin goes to 120 to 140 because once again, you're squeezing lemons. You're talking about minimal, 20, 30%. Meanwhile, the asset is already up 800, 700% in the 1,000 days, right? So back to the technical analysis. Right now we're looking for support. Right now you are seeing support, but the trend hasn't changed. The shortest of the mid-time frames that I would be looking at to see if the poo-poo has ended and we're going up is going to be the daily 2-day and 3-day. And I've said this in the last time that we formed this bottom here and went up, and this one here. Certain things need to play out. Look at the screen. MACD needs to be in a golden cross structure. Are we in a golden cross structure? No. We're still death crossed. And your volume is still coming down, making lower bars, right? It's not like it's light red. Your RSI, is it above or is it below the moving average? It's below. Is it making lower highs and lower lows? Yeah, I'm talking about this right here. 1, 2, 3, 4, 5. Since this right here. I don't care what happened all over here. I'm talking about since the death cross. Death cross happened here. We're using it as resistance. Can you have a dead cat bounce? Of course. Should you expect using the moving average as resistance? Yes. Momentum, down, down. Can you have a golden cross on your stochastic and come up? Yeah, looks like it's happening now. Can you see resistance at the 50 line? Yes. Everything that I'm telling you now is more bearish than bullish. Until we see double bottoms, breaking of the 50 line and going up, breaking of the 50 line, using it as support, volume going the other way, and finally a golden cross, and the golden cross being above the 0 line, then we could all confidently say that the blood is over and we potentially could blast through these levels of 119 and make a higher high. As of right now, that hasn't happened yet. It's very simple. Has that same scenario played out on the daily? No, we're still using the 20 as resistance. We're in section B, we're section B. You could see market bottom indicator going off, but that didn't mean shit over here at 112 to 114 because we made a lower low. That's what I mean by the market bottom, market top indicator holds great value. I use it all the time on longer time frames. This did not call the market bottom of 112 because now it's at 109. Okay? It was not the market bottom here at 103 to 107 because it broke that, made a lower low, then went off again, then broke that and made a lower low. So once again, weekly is pretty much the shortest time frame for the market bottom, market top. Because if you do the same thing I just told you, that has called swings and potentially bottoms. So once again, 2-day, set your alerts. As of right now, you could have dead cat bounces, but the only issue is I'm concerned if the dead cat bounces continue making lower highs, lower lows. Now, once again, that scenario is going to play out. We're going to form a falling wedge. The falling wedge probably will break to the upside. Do we break to the upside? Right? Can we come down here, break to the upside, come down here, break to the upside, come back down to here, right here at 101,309, form a higher low to this right here, right? This section right here is 98 to 100. If we form a higher low at 101.5 to 103.7, still a higher low. Now, that falling wedge, if it does break up and we form anything lower to these highs here, that is the head and shoulders pattern playing out, because this was shoulder 1, head, and then we form the falling wedge to form shoulder 2. And if shoulder 2, once again, stops here, stops here, stops here, anything lower than this box here, and we go to the weekly and we're still getting hit and bearish, your RSI is breaking into section 2, your RSI is below the 20, we're approaching the 0 line, then you need to understand that even more blood's on the horizon, and the scenario analysis of breaking the 106 range and heading to the 98,000 range is on the table. That's Bitcoin. Let's go to SEI. Shout out to you guys once again. So let's teach you the basics. So I type in SEI, but you can see Binance, Coinbase, crypto. Let's do USDT. So here you go, right? So they're all USDT paired. Binance, Bybit, MEXC, KuCoin. Which one do you use? Do your own due diligence, cuzzy, and click 10 of them. See which one has the longest data to use and use that one. Okay, let's go through it. Binance starts here in August 23 at a price of 6 cents. SEI USDT. Bybit. Well, Bybit starts like 2-3 weeks early and shows that this was like at 30 cents, then fell. The whole point of this is it shows you different support resistance levels, where there's liquidity, the whole nine, right? So take 2 seconds out of your day and click through these and see which one has the longest amount of data. Because if one's showing, I went from 0.007, went up, then consolidated, then came back, and now these levels here are lining up with these levels here, shows a totally different story if I was to go to this one, and now you see this, right? Once again, 38 cents, was this the ICO, and it came out, then came back up, you saw your selling pressure, and it's forming these lower highs, lower lows, formed this double bottom here, now it's forming a symmetrical triangle around the same price that we're seeing this price action here. So I'm curious to see if we blow past this 35 cents, are we going to go to 46 cents? If we blow past this 27 cents, are we going to go back down to, 22 cents? So that's the technical analysis, just looking at the chart, right? This one seems about the same as all the other ones. And once again, just to give you a better example, this is Bitcoin on Bitstamp. It goes back to all the way 2011. If I do BTC, USD, and we go to Coinbase, it only shows 2014, right? So there's 2 years, 3 years of data just missing, just gone, right? So SEI, USDT, Binance, okay? SEI, USDT, what was the one I just did? Get AO. Okay, perfect. So, delete everything. First thing we're going to do is we're going to go to a monthly time frame and see if it shows us anything. It doesn't. 3 week, 2 week, 1 week. All right, we'll start with the 1 week. Let's draw some trend lines. First thing we're seeing, very simply put, is lower highs, right? 1, 2, is it this? 1, 2, is it this? Is it this? Let's just do wicks to wicks. So 1, 2, we're seeing support. 1, 2, we're seeing support. That's a key level there, right? Because I was saying, okay, it went from here to here and stopped at 21 cents. What are the odds that December 23 it went up to 116 to come back down to July 24 to the same levels again? Like, it doesn't make sense, right? But this is what I mean by understanding the chart first. Then we went from these mystery numbers back up, formed a lower high, and then went back down to these levels again. The issue is everyone who bought at these levels again thought that we were going to go back here, and we didn't. We made a lower low. Now, what could have helped you understand that we broke the support? MACD was in section B, showing you that the lows could have been broken. RSI broke moving average in section B, showing you that the most recent support could be broken. Stochastic below 20 line, showing you that most recent support could be broken. We are now, if we use that same analogy, same time frame, we're here. Volume's coming down. Your RSI has made a lower high, double topped. Stochastic looks like it has death cross, correct? These, once again, I say it in every video because it's true, cuz it doesn't matter if you're Italian, African, German, Russian, you could confirm that this, I was about to curse, but this indicator, the blue line's below the yellow, right? Right. You could confirm that this green line just turned light green, right? Right. You could confirm that the RSI made a lower high, right? Right. Now let's go to the weekly. Where is the MACD? Where's the RSI? Where's the stochastic? MACD, RSI, weekly MACD, about the death cross. About the death cross below the zero line, showing you what? Your most recent low was here, 25 cents, 24.4. That's probably going to be broken. We're going to test the most recent lows of 19 to potentially 16 cents. That's just where it is. RSI. RSI is about to break the moving average and break the 50. With everything that I've taught you, where do you want the RSI? On the left side, above the moving average. Where do you want the RSI for a continuation to the upside? In section A, meaning above the 50 going to the 70. Now that I just told you that, you could right click, set an alert on your MACD crossing the MACD signal. Create. What you have done is on the weekly time frame, if this blue line crosses the yellow, and you can see it's about to, you'll get a notification. On the weekly chart, you could bring your cursor over here and click Add Alert RSI 4920. That'll notify you that for the first time since April 2014, 2025, the RSI has officially gone bearish. Looking at the wave pattern on the RSI, what do you notice? Well, waves usually get higher highs, higher lows. That's a continuation to the upside. If you see the same low and then the waves do something like this, like the middle finger, that is a head and shoulders, showing you that momentum is changing the other way. Right here, we had one, came to the 50, higher, came to the 50, lower, came to the 50. Apex moment happening, showing me that we have a higher probability of breaking the 50 line. If we break the 50 line and we death cross, we are poo-pooing the fan, and we're coming back down to your first levels of 24 cents, right? I'm just looking at the chart to tell me where traders have found support. I did not make that up. We found support at 21 to 25 cents. So I'm assuming 21 to 25 cents. The issue is this looks like it's forming, and it's also head and shoulders, and it's also symmetrical triangle type situation. So this is doing this. This is doing this. This pattern, because it's making lower highs and higher lows, is indecisive. If something is making higher lows, higher highs, bullish. Lower highs, lower lows, bullish. Same lows, lower highs, bearish. Right? Same highs, higher lows, more bullish. This has a measured move. You would take the meat and potatoes, meaning the middle of the flag, right? This is the pole. This is the flag. Think of it like a flagpole. You would take the middle and say, well, if we were to break up, where could we break up to? If we were to break down, where could we break down to? We have a higher probability of breaking down because the weekly, which is a longer time frame, is showing us more bearish signs, showing me that we could come back down to this support line that has been touched once, twice, 3 times, and I would line that up with around 20 cents to about 22 cents at a low. That is the video. Love you guys. I appreciate the support. What I would do is, once again, set your alerts. I'm curious to see if the stochastic also stays below the 20. As you can see, when it stays below the 20, use it as resistance, goes up to the 50, you're looking at this, right? You can have dead cat bounces. We went from 42 cents to 67 cents. I look like an idiot if I tell you not to buy something and to stack cash. But once again, like I told my friend at the party, if you put money in right now and it goes from 10,000 to 13,000, that's great. But you're still holding, right? Right. And if it goes from that and then goes from 10,000 to 6,000, well, then what? And then your 10,000 goes back to 11,000, your 6,000 goes to 8,000. You're like, oh, all right, we got money back. And your 6,000 goes to 2,000. Because the whole point is, if the long-term swing is still bearish, and it hasn't even started yet on the weekly, I don't care about minuscule pumps on the hour and the 2 hour. Give you a real life example. Do you know how many text messages I got the other day when Bitcoin did nothing? It went from 112 to 116. And people are like, oh my God, bro. What's going on? Please, tell me. And I'm like, bro, it's one fucking candle. One candle. It formed the lower high. Like, this takes 1 fucking second to go to a website and see that it formed the lower high on the swing. And then we went way past this 112 support system and formed the lower low. And now guess what? If we get another pump, and it looks like it's coming, right? Because once again, we went from 117 down to 108. Maybe we form this bottom here and we come back up. If we form a lower high to the 116, it doesn't mean shit, dude. Right? And then if the the midterm, like I just told you, comes up and we don't break the 123 to the 124, it doesn't mean shit. You're talking about one candle, man. Like, but no one talks about the 3 red candles that happened thereafter. I didn't get one text. Everyone's like, bro, I should have bought it. No one told me, right? Do yourself a favor and don't give any advice to anybody. This is why this is a window to my thought process and what I'm doing. When you have 10, 20 years of doing something and you feel confident with your craft, then start taking requests for people's tickers and videos and this and that. Because the last thing I want to do, cuzzies, is tell you to do something and it goes total opposite way. So as of right now, doesn't look great. I would potentially have some shekels on the side, like I said, for choose 3 levels, right? And use the ones that stick out like a sore thumb on longer time frames. So 24.3, 22.78, 21.15. Right there. 0.243, 0.227, 0.2115. Now you're using the theory of we're buying at support and then we'd be taking profit at resistance, right? Because the first thing, I'll end the video with this. The longer time frame does, okay, are we going up? Yes. Have we broken the moving average and the 50 line? Yes. So we need to come down, make a higher low to the 16 cents. This continues to go up. Are we golden crossed? Yes. Are we in section B? Yes. Are we in section B on the stochastic? Yes. Not the best case scenario, but it's showing that potentially this consolidation that it went from 9 cents, okay, this is why you have to look at the whole chart. The coin went from 9 cents to $1.13 and did it 1,100% in 154 days. I want you to understand that's not normal in the usual markets of stocks, commodities, this and that, Rolex, house, right? You buy a Rolex today, you see these guys flipping them. They're not making 1,100% in 154 days. So what has happened thereafter was a consolidation. You saw price action go from 108 down to 19 cents, form this lower high, lower low, lower high. What needs to happen is we want to see a higher low to the 12 cents. When does that happen? When your long-term trend turns bullish. When things start popping into golden crosses in section A's, right? This coin could and should break to the upside. When it does, right? That's the golden ticket. All right. Bullish scenarios, we come down. We form that higher low, like I said, at 21 to 20 cents. This level right here. That would be an inverse head and shoulders on a macro level. One low, lower low, higher low. This is your neckline. This would break down. You'd form that higher low here. Then eventually you would go from here back to here. See another higher low. Then break out and head to these levels. 45 cents. Well, this is why it's important to see the whole chart, right? You don't think this is a key level right here? 40 to like 40 something cents, right? You saw resistance here. You saw resistance here. You saw support, turned into resistance, turned into support, turned into resistance. Guess what? If I were to wait for this to play out, set your alerts around these levels, and then you were to see market structure change the other way, and then you see the higher low, and you open up a long, or you put more shekels in at 19-20 cents, and your assets up 125% in a quarter, 90 days, guess what? Potentially taking 30% off the top. We then break these levels, and we go here, your next resistance levels of, let's just say, 60 to 70 cents. I'm taking another 30 to 40%. As the asset gets extremely overbought and I start seeing hidden bearish divergence and this and that, I like to be 70 to 75% in cash. It's just the way it is. But that's the video. I love you. Right now you're seeing selling pressure at resistance forming a lower high. Is there potential for us to come back down to these levels of 17 cents to 12 cents? Yeah. We need to make sure the RSI stays above the moving and above the 50. You need to make sure the MACD stays in a golden cross structure. And you need to see if the stochastic breaks the 50 or uses it as resistance. That's the video. Love you guys. Hope you learned something from it. If you have and you appreciate the time that I'm putting into this, just like the video. Comment the number 3. I don't care what it is. It just helps with the algorithm. If you would like to see more of these videos, subscribe. I try and post at least one video a week or when I see something happening. If you'd like to request a video, go in the description of the video and there will be a how to request a video, or at least give me a ticker to put on the next video. Do me a favor, when you do the order, there's a communities tab that you could put the ticker in. Please put it there so that I don't have to email you 3 times or 4 times to then figure out what we're looking to do here. Besides that, I love you guys. I appreciate the support. And once again, let's stack some cash.